Nichedge Academy, Passive Index Investing. Disclaimer. The information provided by Nichedge Academy is protected by copyright and is intended for educational and informational purposes only. May not be reproduced, distributed, or used in any manner without express written permission of Nichedge Academy. Please at your own time read through the disclaimer at your own discretion. Education, research, resources, source tools, and training. We aim to educate via video format on the topic as we go through this presentation. We have referenced articles for research purposes from other reputable publishers where appropriate to assist the teaching of the topic. The articles are sourced from the Investopedia with titles and links attached at the end of the presentation. We have Scholarly, an AI-powered article summarizer tool to identify key information such as study participants, data analysis, main findings, and limitations. This can reduce research and study time by over 70%. The original PDF slides and Word document article summaries from Scholarly shall be made available for further studying with the original articles as free resources. All further social media posting enabled by Scholarly may have additional Wikipedia links embedded for further educational reading and research. Coolbot AI software is used to paraphrase definitions on the bespoke topics. Guide and train yourself on the topic by alternative options like the articles, PDF slides, video, Word document, or a combination of all free downloadable resources. Understanding passive investing. Passive investing is an investment approach that seeks to reduce the cost of picking which assets to invest in. Index investing is probably the most widespread type of passive investment. Using it, investors attempt to duplicate and hold a broad market index or indexes. What are index funds? An index fund is a stock or a bond portfolio that seeks to replicate the composition and performance of a financial market index. Mutual exchange traded funds offer a wide range of low-cost index funds that focus on a certain segment or entire market. They require fewer expenses and fees than actively managed funds. What is index investing? Index investing is a passive investment approach that aims to mirror the performance of a benchmark index. Indexing provides more diversification and cheaper cost and fees than actively managed solutions. Indexing tries to match the overall market's risk and return with the expectation that the market will outperform any stock picker over time. Active versus passive investing. An overview. Active investing necessitates a hands-on approach, usually from a portfolio manager or another active participant. Passive investing involves less buying and selling, so investors frequently purchase indexed or other mutual funds. Although both investing styles are advantageous, passive investments have attracted more investment capital than active investments. Understanding passive management. Passive management refers to index funds and exchange-traded funds that track an established index such as the S&P 500. Passive management is the inverse of active management, which involves a manager selecting stocks and other securities to include in a portfolio. Passively managed funds typically charge lower fees to investors than actively managed funds. Choosing investments that fit your portfolio is critical. Passive income refers to money gained by doing relatively little active work or labor. Passive income generating investments include rental real estate, dividend stocks or funds, and limited partnerships. Passive investing in stocks entails copying a wide market index, also known as indexing. Indexing. Market indexes serve as standards for measuring the performance of various assets on the stock market. Index investing has grown in popularity over the years, with passive strategies beating active investments over time. Owning an index can only be done indirectly via self-indexing, index derivatives, or index funds and ETFs. Article title and link. Passive investing. Definition, pros and cons versus active investing. What are index funds and how do they work? Investing in an index. Overview, examples, and frequently asked questions. Active versus passive investing. What's the difference? Investing in index funds. What you need to know. Passive management. What it is, how it works. The 4 best passive income investments. Is it possible to invest in an index? The lowdown on index funds.